let's be real, if rates go to 10%, no one's getting out of the way of that. And I mean, we could be kind of hurled into a stagflation period. I mean, how do you kind of see that playing out? And would it even affect the assets that are currently in your portfolio?
Hey everyone, welcome to our latest TDR Cannabis Exclusive. Thanks for checking in. I'm your host, Shad Dales. Good conversation we have going on here. He's actually one of the most well-respected thought leaders in the cannabis space, speaking in front of a group of people last week at Benzinga, meeting with some key investors. So we want to get his takeaway on what his experience is like as we welcome back in the CEO of NewLake Capital Partners, which trades on the OTC under the ticker symbol NLCP, Anthony Coniglio. Good to see you. How are you, sir? And good to see you last week in Chicago.
Doing great. Good to see you guys last week in Chicago and to see so many of our friends across the industry.
It's always nice, isn't it?
It really is. You know, I'm an in-person person, so I really appreciate that. We've been back doing this for a year. I love going to these events. They can be quite tiresome and busy, but you can't accomplish over the phone or via Zoom what you really can in person with people.
100%. I find these conferences every 6 months. It's almost like New Year's Eve. We just get together and celebrate and have a good time. But most importantly, I got to hand it to Benzinga. They bring the best of the best to these conferences and very productive. So yeah, it was good seeing you. Anthony Verrill, good to see you as well.
Good. How's it going? It was good to be in Chicago. I mean, I know that work from home has been a big theme here lately, but I don't think there's anything better than face-to-face.
100%.
Especially when we're all working.
For sure.
Yeah.
Wanted to talk to you. I know you were busy, very busy. There's a lot of new investors, a good group of investors that we saw in comparison to previous conferences, which was encouraging for the overall industry. Last time we had you on, we touched on how your company is already net income positive and is producing continuous quarterly dividends. We saw firsthand at the Benzinga conference in Chicago, as I said, the amount of investors, including new investors. So you mentioned to us off camera, you had a number of things that you wanted to achieve. So maybe walk us through what you're looking to achieve and you accomplish those goals while you were there.
Yeah, well, thank you for asking the question. Again, great to be with you guys. When we attend these conferences, what we really want to accomplish is we want to focus on meeting with investors, both existing investors and new investors. We also want to reconnect with tenants. We talk to our tenants all the time, but again, nothing like getting in the room with them and talking with them. And we're also talking to people that aren't tenants that could be opportunities for us to invest in the future. And so we had a great complement of meetings and drinks and dinner with all three of those groups over the course of the 2 days in Chicago.
What are you hearing as far as some of your operators, trends right now in the industry, like pros and then some of the obstacles they're facing? But I'm sure this is welcome news if we do indeed see some sort of rescheduling.
Yeah, the way I've been describing the Benzinga tone is optimistic, but not euphoric.
Yep.
In previous conferences, you'd get a catalyst, and you wouldn't even have a catalyst akin to getting through the Senate Banking Committee or getting HHS to make a recommendation, even lesser catalysts. And people would talk about, this is it, we're going to the moon, we're going to buy up this company, buy up that company. And that was notably absent. And I was really happy about that. What we're hearing from operators in the space is all of that stuff would be great, but we're running our business not expecting any of that to happen. And that's music to our ears, right? Because even if those do occur, it's going to take a while for that to really work its way through to impact the actual financial performance. So if the operators are continuing to focus on driving the bottom line and driving operational cash flow, that's very, very good for them.
It's a rare industry where the cart was before the horse when this industry took off, because every conversation, every press release was to the moon. But you got to reset, bring that back and say, hey, we've got something here. Let's not walk away and think this is going to implode. We actually have something here, but here's the reasons why, which is where we're at right now. Don't you think, Anthony Verrill?
Yeah, I mean, with the NewLake, with the thesis with NewLake being on the 15 to 20 year time horizon, I mean, how does this affect the underwriting process, if anything? Or are you also kind of having that mantra internally as it'd be great, it's going to be icing on the cake, but we're going to continue to invest and we're going to continue to underwrite as if it's not happening?
Yeah, we've been underwriting transaction in this sector for nearly 5 years. And so when you think about Curaleaf in our portfolio, what did they look like 5 years ago? Or Trueleaf, so these companies, we've been used to underwriting without any sort of 280E relief. And we don't accommodate for any of these catalysts into our underwriting approach. We do fundamentally believe that these will occur over time, and it's part of the long-term thesis and the long-term value creation for our shareholders, but we don't bake it in. We like to focus on what we know for certain, not what we hope will happen later on.
When we look at this space that's being driven a lot by retail investors, if we take a step back, when it comes to the REIT industry, pertaining to this space, where are we at right now? Because I know you're viewed as one of the top, if not the top REIT in the cannabis space. So where are we at right now as far as the overall growth model? And then where do you see this going, growth wise over the next couple of years? Like, what are the types of investors you're meeting and the interest levels that they're having pertaining to this?
Yeah, I think we're in a long-term secular growth trend in cannabis. And I think that when you look at that line over a period of, say, 10 years, you're going to see it's going to have ups and downs, but it's generally trending up. And so I think that long-term growth model is intact. And in fact, just think about it. You have nearly $100 million of sales. It's just mostly in the illicit market. So we need to convert that. You're not trying to get people to adopt new behaviors. You're not trying to get people to purchase a new product. You're just switching behavior between the legal and the illegal market. So long-term secular growth trend there. In terms of where we are in that cycle, I think we're in a hiatus. I think COVID pulled forward a lot of the growth demand. And I think, the growth that we're seeing in the market, in the industry, is coming from those state conversions, medical to adult use, and then as adult use markets continue to expand. And we'll continue to see that as states roll in. In terms of the investor dialogue, and particularly around REITs, we're a different investment model than I think when people look at an operator. I think the operators have a lot more volatility to them and a lot more, being frank, just a lot more upside, but they also have a lot more downside. If you look at an AIR that's been up 300% since HHS announced, you're not going to get that type of upside volatility in a REIT, but we're asset heavy. We own a portfolio of commercial real estate that's diversified across 13 tenants, 12 states, and 32 properties. And that gives you a sense of stability. And so while we've had a pullback in broader markets as well as in cannabis over the last week or so, you haven't seen our stock pull back to quite the degree. And so you're not going to get the highs and the lows. And we pay out a quarterly dividend. And so when we talk to investors, they say, I'm going to get value creation upon the actualization of these catalysts, but I'm going to get paid a dividend along the way. And at today's price, it's over an 11% yield. So even comparable to a 5% treasury, you're still getting a 600 basis point premium off of a portfolio of real estate. I know that was a long answer, but a couple of pieces there. So continued growth and continued investor interest.
Yeah.
What's your take on the macro? I mean, I was reading yesterday that Dalio was kind of saying that he's expecting rates to go up to maybe 10% in 2025. And I mean, we're seeing sell-offs across all the broad markets. I mean, I know people say that that cannabis is not correlated to the macro, but I mean, let's be real, if rates go to 10%, no one's getting out of the way of that. And I mean, we could be kind of hurled into a stagflation period. I mean, how do you kind of see that playing out? And would it even affect the assets that are currently in your portfolio?
Yeah, I think anything that dramatic certainly is going to have an impact on all industries. It'll impact consumer demand. It'll impact the fiscal picture of this country, which will end up driving it'll have to drive some fiscal reform because this country just can't pay for all that interest. In the 35 years or so, and I've been in and around banking for most of that, what I find is that we will go through these ebbs and flows. It will find some equilibrium. I think it's going to be difficult to see us go up that fast. But in a rising rate environment, where do you want to be with higher inflation and rising rates? Hard assets are like real estate, is typically a good place for you to store cash. And so it's going to raise, switching gears slightly, it will raise, if that happens, the cost of capital for all industries, cannabis included, right? And cannabis has a premium on their cost of capital. And so it'll raise our cost of capital, raise the industry's cost of capital, and the whole world will have to adjust to that higher cost of capital, which just drives more inflation, which you can see where you get into that cycle. Let's hope we don't get to 10%.
That's somewhere I hope I hope we get nowhere close to. I mean, obviously, commercial real estate's been front and center when we were talking about the SMBs and the whole little kind of banking crisis that we saw at the beginning of this year. I'm assuming that assets are starting to look juicy in the commercial space.
Yeah, I would think.
For you to start, do you have like a shopping list, or like are you planning to deploy capital into this market with commercial real estate? I'm assuming starting to look pretty damn attractive. across the board?
We'd love to deploy capital into this market. We have a $90 million credit facility that's available to us to be able to put money out and invest in additional deals. But we look at three primary factors in underwriting. The real estate, of course, that's just one element of it. Number two is the company, not just the balance sheet, but the management team's ability to raise capital, which has really proven, I think, to be a good precursor through a very difficult time. And then number three is the jurisdiction. We like to focus on limited license states.
Yeah.
And so we look at those three factors and then we'll make our investment decision. So it's not just about real estate. But what I will say additionally around real estate is we track the value of our real estate. And so we actually have seen the value of our real estate appreciate over the last couple of years, transactions that we did in, say, 2019, 2020. Right. And it makes sense because you've had a run in industrial and retail real estate over that period. So it makes us feel better about the value of our portfolio at an asset level.
That would only increase too as this industry gets more and more established, correct?
Absolutely. I think as this industry gets established, all of the operators become better credit quality tenants. Right. And so part of our strategy, or a key part of our strategy in renting out our properties on a long-term basis, is executing transactions with quality companies that can pay rent for 15 to 20 years. And so the higher the predictive ability of getting that cash flow, that's the higher quality portfolio. And so as HHS, let's assume we get a rescheduling and you get a lot of that extra cash flow coming to the bottom line for our tenants and operators at large, that only bolsters the credit quality of the industry. And so over time, as sales grow, as they get more efficient, as cash flow improves, the quality of our cash flow streams improves as well, which should drive additional value.
What would you say are common questions you get from investors that are learning about this space more, but more specifically about a cannabis REIT in the industry? Like, what is a common thing that you come across all the time that people show some interest, or for that matter, aren't even aware? Like, how do you go about presenting this?
Yeah, typically people start looking at us. They may not be familiar with REITs because they're looking at the cannabis space and they don't recognize that we pay a quarterly dividend, because dividends in this industry are unheard of. Right?
Yeah.
People don't generally pay out a dividend.
You don't hear that often.
You don't hear that often. And so when we talk to investors about the catalysts, they fundamentally agree that over time you will see a rescheduling. Over time you will see federal legalization. It just may take 5 years, 7 years. But if you're getting paid a healthy quarterly dividend while you're waiting for that catalyst, people get pretty excited about that when they hear about it. And so they can see the upside in the stock price, but yet get paid a coupon along the way. The other thing we get is, if SAFER happens, you're out of business. All the banks are going to rush in. And it's really a misnomer. And in fact, where I point them first is to the language of SAFE. And one of the few things that has changed in SAFER from SAFE is they've given the federal regulators an additional 6 months for a total of a year to write the rules. Again, having been in banking for most of my 35-year career, I can tell you banks generally don't move until the rules are written. It will take the regulators over a year to even schedule a meeting to get the multi-jurisdictional regulators in the room necessary to create rules for a business that's legal in some states and illegal in other states. Never been done before. Like, they're making it up. So it's going to take a while for the rules to be written, and therefore banks will not come in until, as a general matter, until that's done. And even when they do, it's a different model. Providing mortgages is very different than the advance rate we give on a sale leaseback model. And our knowledge, our relationships, and our understanding is really more durable than any small set of banks coming in to provide capital at the edges.
Yeah.
I mean, I would argue it's a complete opposite. If anything, it's going to be an inflection point for the business to be trending to the upside. I mean, with traditional banks and with the loosening of financial regulations around your underlying assets, I mean, that's a net positive for your business model. Very, very far from being a net negative.
Yes, completely agree. Completely agree.
Well, I just think last month is a prime example on how this industry could move if we do get some sort of rescheduling, because at the end of the day, you might see stocks rip for 4-6 weeks, but what happens once the dust settles? And I think that's where, when you look at a lot of sophisticated investors in this space, it's not a 3 to 5 month trajectory looking out. It's 3 to 5 years at the minimum, right?
Absolutely. I think you have to have a long-term perspective. And when I think about HHS, when I think about rescheduling, when I think about the incremental cash flow, What I really hope operators do, and I actually expect most of them to do, is to utilize that newfound cash flow to bolster the balance sheet.
Yeah.
Yes.
To either pay down some debt, maybe they can pair up. Like, I applaud Columbia Care, which is a tenant, taking the opportunity to raise some capital, do that exchange for some of their debt, where they were giving warrants to retire some of the debt. Like, all of those incremental moves will be great moves to repairing the balance sheet. All that's going to do is set the stage for those operators to be able to embark upon expansion when there's a durable business opportunity to start taking on that CapEx again.
Yeah.
Yeah, it's almost like you're going to see the trend of these companies re-equitizing, leveraging that free cash flow to then pair up the balance sheet and then just start to make moves moving forward. I mean, you talked about limited license markets as being part of your investment thesis. We're seeing Pennsylvania, Ohio, hopefully Florida, flip to adult use conversion. When these markets convert to adult use, in your opinion, is that when you start to see them mature, and that's when you start to see price compression and more licenses come online, or is that really when the S curve starts to kick and those underlying assets are kind of going to see hyper growth as there's much less restrictive means around the actual selling of cannabis?
Yeah, we study this in a fair amount of detail. Unfortunately, the answer is it depends. And it depends on what the medical market look like. If you look at Pennsylvania, there is a very significant penetration into the population with the medical program today. So you already are starting with a sales base that's fairly high in Pennsylvania. And that's why so many MSOs entered Pennsylvania, because it was a robust medical market before it even converted to adult use. So I think you'll find, because it's so robust, that move to adult use will be incremental, but it will be perhaps less incremental than if you were in a state that maybe had a 1% penetration rate with its medical market. Right? That's going to unlock much more. So it really is a state-by-state analysis that you have to undertake to understand the growth dynamics.
And I'm assuming a market like Florida, with our very strong medical market. However, when you pair on the 120 million plus in tourism that we get a year, that's where you start to see the delta.
Yes, and you can definitely see some upside, right? And then we also, in that analysis, look at the penetration of dispensaries. How many dispensaries in a state? What is the average population per dispensary?
Right.
Because if you were to look at, say, a state like Connecticut right now, where it has very, very few dispensaries relative to the population, versus, say, in Illinois, where it's becoming a bit more saturated. I don't mean that in a negative sense, just more saturated. What you end up finding is sales actually start to go up because it is better access to the product in the legal channel. It's a combination of prices start to normalize, access improves, and then sales start to go up. So I can't emphasize enough, as people are looking at investing in companies, and for us, investing in properties, and the companies are our tenants, to understand what are the state dynamics that will drive their growth if they're talking about growth.
I actually plan to ask you that. You actually teed up my next question without even knowing it. Because I mean, obviously, whenever we're talking, whether it's our catch-up calls or like off camera, it's usually a good conversation into like the underlying assets and the operators in this space. Like, what would you say are like the top 3 points that you look at when looking at a cannabis company?
Yeah, good point.
Like from diligence, from a diligence point of view.
Yeah, the financials and the footnotes, like, put those in one category. The footnotes are a treasure trove of information. And so I encourage all investors, like, definitely look at the footnotes. You learn so much. But analyzing those financial statements, whether it's the quick ratios, just some very simple things: quick ratio, acid test, looking at the cash flows. A lot of people are looking at operating cash flow in the cash flow statement. That's great. But also look at the financing section, because sometimes GAAP will have you classify, say, a lease as a financing and not as an operating lease. So the cash flow that is rent is actually recorded in the financing. And so you may have $2 million of operating cash flow. I'm going to make this up, and maybe $3 million of financing outflows. So net, really, it's not cash flow positive. So understanding those, I mentioned it earlier, looking at that management team's ability to raise capital. And it's not about their ability to raise that seed round. It's their ability to sit in front of institutions and raise institutional capital. And there are a lot of companies in this industry that did a nice job raising that initial round, maybe even that second round from friends and family. But if you need to grow your business, you have to be able to access institutional capital. And if you can't sit across the table, and having worked at JP Morgan and raised billions of dollars for people, you get a sense for what it takes to sit with a hedge fund or sit with a private equity firm or a family office and win that capital out of their portfolio. And so there's that. And then we're looking at what is the growth strategy? And so we're not trying to pick winners and losers, but there are a lot of people that when they give you their projections, they would say, oh, we're going to be 10% of sales in the state of Pennsylvania. Like, no, you're not. Realistic, like, okay, how are you going to get there?
Yeah.
And so really understanding those business plans. And I think we've weeded out most of that group at this point.
That's
I think
interesting.
this down cycle has had to wash a lot of that out. And so, when we look at our portfolio and we look at our tenants in particular, we love the conversations we have because they're detailed, they're based in analytics and in financial rigor.
How much do you think, when we talk about the growth of the industry being more established, but tenants in general, like how much they've learned over the last couple of years? Have you seen a major progress overall and just the knowledge of the space itself in running a sustained business model?
Absolutely. And the two things I would focus on to demonstrate that is look at the amount of CapEx. Very, very little CapEx this year. That's a big use of cash.
Okay.
Yeah. And so what that tells you is the operators are saying, I'm not going to take on new projects. I'm focusing on my core right now. And then the other metric is the operating cash flow. Right? They're doing the things necessary, such as layoffs. And these are unfortunate, but for the company to survive, you've seen layoffs, you've seen a rationalization of footprints to minimize cash burn, generate additional cash. Air as an example, I think it was really smart for David to the new CEO to come in and sell Arizona. And he was panned a little bit for, Air paid X and they sold it for down here back to the same. Forget all that. He eliminated a cash burn and he generated cash for his balance sheet. And those are the types of actions that I would point to say, I really do think people get it. I think this environment created a level of discipline that is going to serve the industry well for the next couple of years.
Discipline's definitely a word that you're seeing a lot more today than what you did a couple of years ago. That's for sure.
Mm-hmm.
Oh yeah. I remember walking around conferences and seeing pitch decks that just had no rhyme and reason. It was basically, we're going to grow and sell cannabis. We've got no idea how, and we're trying to raise $30 million. But we have a preliminary license in like Michigan. It was like, good luck. You're going to get your lunch eaten down the road.
But they were good looking decks. Glossy, great pictures,
great looking decks.
Low
and
cost.
I mean, to touch on your point, I mean, I've been on both sides of the table, raising money and investing money, and I've seen entrepreneurs with shit product that can raise money that are much more. It's crazy that are much more successful than ones with a good product that can't raise money. Yep. It is a very underserved metric of a team that you're investing in.
That's crazy when you think about it.
And I'll pick off on that. What we also look at, Anthony, is, and I think you're touching on this, the skill set to get the business off the ground is very different than the skill set that you need for running a business with 5,000 employees.
Yeah.
It's just different, right? There's entrepreneurial and there's operational. And so not everybody can make that transition as a leader from entrepreneur to operational leader. And so that's another element that we look at. And in many of these companies, you've actually seen where the entrepreneur is no longer running the company. Yep. In the great companies, those leaders are smart about knowing when their skill set is different and when it's time to step back and let an operational person take the lead.
Definitely. I mean, I would argue that we've seen that actually in probably the top 5 or 6 MSOs. As far as management teams go, you've seen the management teams flip.
Look at Terracent.
You've seen people that are well seasoned in respective industries outside of cannabis come in, and now they're at the helms and they're in execution phase and scaling. Because they've done it before and they know what to do.
It's the next step. It's the next step, right? No better testament. And I know you touched on this last podcast, but no better testament than the companies that you work with. But maybe outline again some of the tier 1 MSOs that you work with. And to Anthony's point, when it comes to growth states, like, is there any states that aren't really being talked about that you think will come onto the center stage in the coming years that you're keeping your eye on?
Yeah, and so let's go backwards. I think in the States, certainly everybody's talking about Ohio. If that gets adult use, that could open up and be a pretty good market. We look at again, long perspective here. Texas.
That's what I was
Really
going to bring up.
minuscule program, right? Really minuscule program. But when you actually think of the population of Texas, particularly the veteran community that's in Texas,
you just talked about medical being strong. That there's a footprint right there, right?
Right. And so it's this tiny, tiny program. If they actually get that program going, that could be a huge growth driver for the industry and very, very limited license.
What is there,
Georgia would
three?
be another
Is there
one.
3 licenses in Texas?
Yeah, there's 3, and I think only 1 is operational.
Consortium owns one of them, and they're just sitting on it.
Yeah, I mean,
Sitting
just the
on it
market
waiting.
is so small. We spend time talking about what the difficulties are there, but suffice to say, that's almost a non-existent market. So that's a huge growth market for the industry over
Sure.
time. And I look at other states that are red. You know, like when you look at the map from a political perspective, there are a lot of red states that still have a lot of growth for cannabis, whether it be in the Carolinas or down through Georgia. Right, that program's really just getting going. Even Alabama and some of those other red states, there's still, I think, a lot of growth to be had in this industry.
Oh, North Carolina! I think North Carolina and Georgia are going to be huge markets. Mm-hmm. I mean, Kim's quietly penetrating that market with TruLeaf, and then a lot of people forget the cash crop in North Carolina is tobacco. I mean, those guys are going to want to get their share of cannabis, and I'm sure the climate and I'm sure the weather permits it. So, I mean, North Carolina, it's there. I know their medical market is slowly getting approval. There's a lot of apprehension, unfortunately, in the upper levels of government, but I think over time that market's going to be a good growth market.
It take years to get there for sure, years. But those are some of the exciting things. In terms of your question of companies that we deal with, so in our portfolio, Curaleaf, Columbia Care, Air, TruLeaf is a tenant. Acreage is a tenant. We also have on a private side, we have high quality names that not everybody's going to know, but a C3 Industries, smaller multi-state operator. They do a terrific job. Mint Cannabis, Arizona, Massachusetts, Michigan name does a phenomenal job in running their business. We've got a dispensary with Greenlight. PharmaCann is in the portfolio.
That's a company that not a lot of people know about. That is a behemoth.
Why is that? Walk me through.
I mean, I'll let Anthony kind of get the color, but I mean, I've always kept in the back of my mind, yes, we're focused on and love the companies that are public, but there are a lot of private companies that are large, successful cannabis businesses in these major markets.
And I think that's the important thing that you addressed in the last podcast, that, you know, again, I know you're doing a lot of underwriting that's not dependent on rescheduling, but if there is, the private side is going to see a huge growth opportunity, right?
Yeah, for sure. And a lot of the private companies didn't have access to debt the way the public companies did. And so whether it was them being smart or just the inability, many of the private companies aren't as levered as some of the public companies. And many of them just didn't take on the growth strategy that some of the publics did. And so in some of those private companies, you can find some quality balance sheets with free cash flow after paying federal taxes. And so that relief from 280E is just going to bolster their performance. To be sure, there's absolutely private companies out there that are suffering and falling away to the wayside. So again, it requires sifting through the data and making good investment decisions. But you're absolutely right. Tons of great companies in the private sector.
Yeah. I just looked online. There's 30 million people that live in Texas. I didn't realize there's that many people.
Texas is going to be huge. Once they get it together, that is going to be a massive market.
Think of what that'll do, even from a publicity standpoint. Like one state that you think would never pass, even from a medicinal aspect with cannabis, but that'll definitely be a sign of like the times, how things have changed towards the overall industry, especially finally getting some answers and hearing what, you know, a lot of needs what these veterans need. But listen, this has been a great conversation. Really, really enjoyed this. Hopefully our viewers got good ideas and responses from you on just the trajectory of like where this industry is headed. And more importantly, just the feedback you provided. But trying to think of when we're going to see you next. I think we're going to be in New York.
Great.
I think next month. A few events that we're supposed to attend, but we'd love to catch up with you, maybe do something in person. But more importantly, this has been great, and let's keep in touch.
It's great talking to you guys. Thanks so much for the opportunity.
Thank you for your time.
Thanks, Anthony.
Have a good night. Bye.
So what'd you all think of the interview? Did you like what we recorded with our guests? Then leave a comment below and let us know what you thought of it. And if there's any more questions you want us to ask, as usual, share this video with your network. Click on that bell for all notifications. And most importantly, subscribe to our channel because we would not be here without you. Thanks for watching, everyone.